Hello friends, we at Madover Insurance are pleased to start a 3-month long certification program on reinsurance. This program will be through online videos, recorded videos that we have created with more than 30 hours of study material. In addition, every week there will be a 1-hour session with the trainer wherein each of the candidates who are registered for this program will be able to get their doubts solved during this period. There will be tests, there will be assignments, and at the end of the program there will be a certificate awarded to all the successful participants. Whom is this program meant for? As you would appreciate, reinsurance is a very specialized function. Even when an insurance company has some people in the reinsurance department, they ensure that the same people continue to be in the department till they leave the company. It is because the more exposed you are to this function, the more experienced you are in this function, more will be your capability in terms of be doing the best as far as the reinsurance program of your company is concerned. It is very, very important for insurance companies to create fully trained persons who can act as a backup in case your reinsurance department grows or some of the people working in your reinsurance department are leaving your organization. This will be very, very useful for each of the insurance companies to create that backup of people who can be useful to you as reinsurance professionals. The reinsurance brokers play a very, very important part as far as placing the reinsurance program is concerned. Again, this program will be useful for all the brokers who are in this field of reinsurance. Students who are writing the CIA exams, who are writing the III exams, or for that matter, students who are pursuing their MBA course will also find this course useful. I personally will be completely engaged in this particular program, both in the creation as well as in the interaction with the participants. Even the entire examination system for qualifying for the certificate is being created by me personally. One question that may come up is, what are my credentials? My name is Atmaram Cheruvu. I have been in the insurance and reinsurance world for over 32 years. I have been as a buyer of reinsurance for over 20 years. I have been a seller of reinsurance for over 10 years. And for more than 3 years, I have also been advising various brokers on various treaty and facultative placements. So if you look at it, with my background, both as a buyer and seller of reinsurance, I would believe I have that experience to give highly practical and career-oriented advice as far as the reinsurance function is concerned. The next thing that we have to look for is, what are we going to cover in this program? We will start off by introducing the reinsurance. We will talk about retrocession. We will try to understand what are the functions of reinsurance. And as we understand the functions of reinsurance, through problems we will try to understand how reinsurance can be a very effective tool as far as solvency relief and financial relief is concerned. We will also look at the role of different parties in reinsurance. We will look at what is facultative reinsurance, what is treaty reinsurance, what is proportional reinsurance, what is non-proportional reinsurance. We will not end here. We will look at what is called as the ART or the alternative risk transfer mechanisms. These are the alternatives to conventional reinsurance, including catastrophic bonds, captives, and so on. One important thing whenever you look at a reinsurance slip is what is the basis of attachment of the cover of the reinsurance contract. We will look at different bases of attachment, both in terms of risk attaching as well as loss occurring. We will look at who are the participants in the reinsurance market, who all constitute that market, what is the role of traditional reinsurers, what is the role of the Lloyd's market, what is the role of the reinsurance department of the direct insurance companies. We will also look at what are the legal issues related to reinsurance. We will look in more detail also in terms of what are the Indian reinsurance regulations that we have. As far as proportional treaty reinsurance is concerned, we will look into detail using calculations and using problems, what a quota share is, what a surplus is, how is premium and claim allocated between the cedent and the various reinsurers, at what situation facultative will be required, how is the premium and claims cession or the claims being claimed from the reinsurers being done using problems. We will understand what is the retention, how do you set a retention, what are the parameters you need to consider when you are setting a retention. If you are a new insurance company, what are the thumb rules to be applied? If you are an existing insurance company, what is the methods that you will be using? We will also look at the concept of graded retentions. We will understand in a surplus treaty why is it that so many times you are being advised to have a second surplus and a third surplus rather than having a single surplus treaty. In many of the slips, you will find a concept called as gross line and net line. We will try to understand what is this gross line, what is net line. Further, we will try to understand if you have a surplus treaty, are you allowed as per the treaty conditions to actually take or protect your retention under your surplus treaty through a quota share. In addition, are you allowed to protect your retention under a surplus treaty through a risk excel? Do you need to take some permissions for that? We will look at how we do reinsurance using the sum insured underwriting and versus how do we do it using PML underwriting. Most of the markets where surplus treaty is actually operate using PML basis. We try to understand that in detail. One thing that we need to understand is the fact that as a reinsured, you will have to manage the catastrophic accumulation. We will look at the management of this accumulation, and as we would appreciate in a proportional treaty, what is actually happening is the original premium is being shared with the reinsurers. Hence, it is obvious that the reinsurers pay what is called as the reinsurance commission. So we will understand the different types of reinsurance commission, whether it is the fixed reinsurance commission, the sliding scale commission or the profit commission. One thing that has become a norm after the Thailand floods has been the introduction of event limits within proportional treaties. Very unfair as far as reinsured is concerned, but we need to live with it. We will try to understand what is the impact of the event limit. We will try to understand that when a spillover from the event limit is coming into it, is it automatically covered under your Cat XL or not covered? Another norm that is coming, especially when the treaties are regularly making losses, is what is called as a loss participation clause. As we need to appreciate, the reinsurance market has hardened. It is very, very tough nowadays to get proportional reinsurance, and hence the introduction of loss participation clause may become a norm. We need to understand how does it operate and why it is unfair as far as reinsured is concerned. We will also understand what is this treaty balance that reinsurers talk about and how they use the treaty balance to ensure that they limit the capacity they provide to the reinsureds. We will also look at the concept of a combined quota share and a surplus treaty. When we come into the non-proportional reinsurance, we will look at risk excess of loss, catastrophe excess of loss, aggregate excess of loss, stop loss. We will understand the concepts related to GNPI, which stands for gross net premium income, and how it differentiates between the return and the earned premium. What is this concept of rate on GNPI? What is the concept of rate on line? What is the earned premium? What is the return premium? What is the concept of minimum premium? What is the concept of deposit premium? And when this minimum and deposit percentage is the same, the concept of the minimum deposit premium. In a non-proportional reinsurance, whether it's a risk XL or a Cat XL, or for that matter even a stop loss, very, very important to understand how do we determine what should be our retention and how much cover should I buy, what is the limit that I should be opting for. And one introduction that has happened in the proportional treaty I talked about of event limit has also found its way into risk XL. We will look at that introduction of event limit and how it affects the risk XL. Non-proportional treaties, these excess of loss treaties, are never usually bought as it is, they are layered. How do you layer the treaties? What is this concept of layering we will be looking at. We will also be looking at what a risk cum Cat XL is. When do you buy a separate risk XL and a separate Cat XL, and what exactly is the situation when you buy a combined risk cum Cat XL. In a risk XL, certainly you will be arriving at the limit you want to buy, but if you are doing PML underwriting in the proportional, there is a possibility of a PML busting or a PML error. How do you protect yourself by buying a PML error layer under a risk XL, and what is that limit you need to be buying as far as the PML burst layer is? As far as Cat XL is concerned, we will look at what a 2-risk warranty is. We will also come back and look at risk XL, how if you put a reverse 2-risk warranty, you can ensure that for Cat events, directly from the proportional, it flows into what is the Cat XL without getting into the risk XL. The concept of inuring benefit is something also we'll be looking at. Another important thing in Cat XL is what is called the hours clause. We will look at different hours clauses that are being operated in the market. One important thing that we have to understand in a non-proportional treaty is you need to pre-decide how many reinstatements you need to buy. How do you decide it? Secondly, when a reinstatement has to happen, what are the calculations involved as far as these reinstatements are concerned? How is the reinstatement premium calculated? How many reinstatements are allowed? All these aspects through problems, we will be looking at it. One of the most important things or the differentiator between a proportional reinsurance and non-proportional reinsurance is, in a proportional reinsurance, what we are tending to do is, we are looking at sharing the original premium. In a non-proportional reinsurance, reinsurers quote the premium. How do they quote it? What is this pricing principle? What is experience rating? What is exposure rating? What is a burning cost? For the lowest layer, even a reinsurer gives a swing rate. How does it actually operate? How is it against the very interest of the reinsured? So at the end of the day, we will try to understand how do we look at the treaty profitability. Finally, at the end of the day, after having understood the proportional treaty and the non-proportional treaty principles, we will try to look at how do you design this treaty? How do you negotiate the program? How do you place the program? What is this rating as far as reinsurers are concerned? What is reinsurance accounting? What are the different accounting methods? What is clean-cut accounting? What is a premium and loss portfolio transfer? What are the various wordings used for proportional and non-proportional reinsurance? What are the exclusions? How do you model it? How do you model for catastrophe? When you have to decide on a limit you need to buy as far as Cat XL is concerned, how do you model it? In addition, we will be looking at specific aspects relating to reinsurance of a property portfolio, engineering portfolio, motor portfolio, PA or a personal accident portfolio, a liability portfolio, a marine portfolio, aviation portfolio, agriculture portfolio, and so on. And finally, we will look at the reinsurance claims. We are going to cover treaty in great detail, and as all of you would appreciate, almost 90% of the portfolio is supposed to be taken care by treaties. But whenever an exposure is beyond the treaty capacity or an exposure is an exclusion under a treaty, you require facultative. We will look at facultative reinsurance also in detail. We will look at features of the facultative reinsurance. We will look at advantages and disadvantages of facultative reinsurance. How do you buy facultative reinsurance on a proportional basis, on a non-proportional basis? How do you calculate the premium and claims in a facultative reinsurance? What are the reinsurance driven clauses in a facultative slip? You will find that many reinsurers insist for specific clauses, whether it is an engineering slip or a property slip. What is it? We will be looking into detail of it. We will also look at various warranties that are put, and also we will look at in specific about the premium payment warranty. So friends, this will be a very comprehensive course. You can do it at your convenience. The videos will be available with you. Every week you will have access to me at least for 1 hour. There will be assignments, there will be tests, there will be a certification process. And hence, I hope all of you will join us in this particular certification program that we are soon launching. Thank you all and see you at the program.